Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. As we head towards the end of the month and also the important risk event of the month, which is the FOMC tomorrow, we see that the monthly bar continues developing as a breakout bar from the previous four-month balancing range. On the weekly, we are trading inside the previous week range. It is important to note that we are trading in the upper half, so we're maintaining the positive momentum that we had towards the end of last week. So there's no further change on the larger time frame. However, on the daily, today we had a little pullback from the last two overlapping sessions. But I would talk about this in a minute with more detail, but the close I would say was pretty strong, and now we have the possibility of having daily access here. So if tomorrow this daily access is confirmed and we trade back above, there's a good chance that we extend to the all-time highs or we make new all-time highs, all depending on the FOMC outcome. So looking at the market profile, today we had a gap opening below the overlapping last two sessions, but the important thing to note here is that that gap was closed almost immediately after the open, and you can see the very healthy and strong excess tail that was left down there. Now, if I open up the profile, after that gap was closed on the E period, notice how the EFGH all came toward this area and could not get followed through down. I think that right here there's a very good chance that the market got too short and you had a little bit of a squeeze later in the session, creating this spike. Now, I would say that one of the possible reasons why you didn't get followed through is because participants prefer to stay on the sidelines ahead of the FOMC. But notice that despite some profit taking, even some selling or some activity rejecting this spike, it was not possible for the afternoon pullback to even reach that interesting low, which is a very weak structure, but it is interesting. You can see that kind of trending with higher lows and higher highs. So when you see this, as you're moving from a 2-day balancing range, you immediately go back to the border of the range. You start building value and acceptance, and you kind of grind up. That's a very strong indication. That's why I say it is a very strong close. And obviously, tomorrow is a big risk event, so I don't want to make any strong conclusions out of this, and I don't want to position myself either. But if this excess remains here and we continue on this type of behavior, there's a good chance that this excess will constitute daily excess and that will rotate high. So the immediate focus for tomorrow definitely would be on the value for today and whether we get acceptance above, if definitely we get acceptance above today's high, that will confirm this excess, and that will actually be a confirmation of a failed break outside this 2-day balancing range. And it's not uncommon to see that when you fail at one side of a balancing range, the destination becomes the other side, which in this case is the all-time high. Now, there's a lot of time before that, and that is if we get acceptance above here. The other scenario is that we get acceptance below half back of today, in which case we will start erasing or challenging the excess left down here earlier in the session today. And also remember that if we don't challenge this area below 30.1325, technically that's a daily excess that we have in there. So I would say that if that is not challenged and we start the session and the move is up, I would say that the odds are good unless the FOMC disappoints that we're making new all-time highs by the end of the session. But again, as you know, anything can happen because odds are just odds. So the focus is, let's see where value develops relative to today's, with focus on the high of the day and the halfback